Hello, I'm Stephen High, Chief Manager of Kraft Asset Management in Nashville. In today's video, we're going to talk about the 7 deadly sins of investing. Investment mistakes happen, and when they do, money is lost, and often so is confidence. Learning to recognize investing mistakes can help you avoid the pitfalls. The first sin we want to talk about is pride, being overconfident. Often investors' opinions of their investment skills is too high, and being overconfident can be costly. The reality is no one investor is smarter than the market. The solution is hire a good fee-only financial advisor, and a good advisor can help you invest wisely and help you avoid the costly mistakes that often come with being overconfident. The second sin we want to talk about is envy. The grass is always greener in somebody else's portfolio. Of course, we all have stories of a friend who lucked out and bought and sold an investment at just the right time. So ask them how they did on their other investments. The important thing here, though, is focus on your portfolio, not your neighbor's. You have your own goals to accomplish, so the solution is align your decisions to meet your long-term financial goals, not your neighbor's, and maintain discipline and stay the course. The next sin we want to talk about is lust. And that's making investment decisions based on emotion. People tend to buy investments that have done well recently, thinking that they're going to continue to do well. Falling blindly in love with a current hot performer can be detrimental. And chasing returns is one of the worst mistakes that investors can make. There are numerous examples of people doing this, such as the real estate bubble, the gold bubble, and going way back, even the tech bubble back in the 90s. The solution here is avoid the daily news, what we typically refer to as market noise, and also avoid ads touting the latest popular investment. The fourth sin we want to discuss is gluttony, and that's investing to an excess. Overloading on a single investment when it's doing well. The problem here is it's not going to continue to do well, and this dramatically increases the risk of your portfolio. There are a myriad of risks in any investment, so don't put your eggs in one basket. And as we've all heard time and time again, you want to diversify your portfolio to reduce risk. And you want to keep your allocation, both equities and bonds, within your ability, willingness, and need to take risk. The fifth deadly sin is sloth, and that's working without a plan. Having a written plan is an important step that many people put off or simply don't do at all. A good written investment plan should drive all of your investment decisions. And without a sound plan, you may be investing inappropriately and choosing investments that are ill-suited to meet your goals or your time horizons. The solution here is to develop a good written plan that is the roadmap that defines your financial goals and considers your tolerance for risk and volatility. The sixth deadly sin is greed, chasing returns and ignoring risk. There's really no such thing as a free lunch, and there's no risk-free way to earn a 20% annual return. Jumping into an investment as a surefire thing in the hopes of gaining above-average returns is foolish, risky, and greedy. The solution is avoid get-rich-quick promises. And the last deadly sin is wrath, losing patience while looking for instant results. Wrath is often born out of short-term thinking. Getting frustrated and selling quickly is not the way to grow your investments. They take time to grow, and there are no shortcuts. As we all know, markets fluctuate, but the long-term trends have always been up. The solution? Patience pays off. Those who stay in the markets during the bad years typically fare better than those who are constantly buying and selling. In conclusion, investment temptations abound. It's easy to get caught up in the market's highs and lows, but seeing the errors of bad investment ways, you can avoid the investment mistakes and their losses. If you think we can help you avoid these mistakes, please visit our website at www.craftasset.com or give us a call at area code 615-782-4286. Thank you.